Hi, in this video, I will walk you through how to navigate through the portfolio trackers when you log into the OTP website. So when you enter the OTP website, you will see different tabs here. And then below that, you will see portfolio tracker, which tracks the OTP trades, the one that is still open. And then you also see my watch list, which is the one that I added, the trade that I have studied and added to the watch list, but I have not entered yet. Or I can choose to enter it later. Finally, you will see one tab called Closed Trades, which are the trades that I have closed, whether for profit or loss or break even. So when you click into the portfolio trackers, you get into the open trades. And it will look like this. On the top, you see portfolio tracker open trades. Now, since I recorded the last video, I have made some improvements to the tracker. And I explained to you what are the new things that I added. First of all, the first column now is a trade action notification number. Remember, every time I send out a notification of the new trade, I always tag it as TI, which is trade idea, year, month, and the numeric number for the trade during that month. So right now, for example, I have several open trades. The first one is tagged as a TI 200510. So that means this is the number 10 trade that I sent out during the month of May 2020. And that happened to be a Boonbang color trade that I enter. And right now the trade is making $66 after the rolling, because the short call expired worthless and I rolled it last Friday. So cumulatively, the trade is making some money here. And so on and so forth. And you can see also trades that I sent out on the ESS, which is earnings sniper spread, the new strategies that I developed. And I'm having the Z-scaler right now and the dollar general. So those are the two trades that are still open. And then, of course, we have Boonbang on HPQ and the G-layer trade also on the Boonbang strategy. Now, the new thing that I added, and the very important thing, is the new features for tracking or monitoring Snipex portfolio. So as you know, when we trade Snipex, we need to be very nimble. We need to know when is the time we need to adjust or close it. Or we need to add new trades to balance the portfolio delta. First of all, you will see the total portfolio of Snipex first. How is this doing? So you scroll down to the bottom and you see one liner for the Snipex portfolio dashboard, where you can see that first of all, the combine on the Snipex trades is making $3,000 plus profit. And because this one I have not rolled anything, so there's no rolling cost or profit. The next one you need to track is, very importantly, total delta of the Snipex portfolio. Right now it's negative 27, which is slightly bearish. So if you imagine I have the one mountain for Snipex portfolio P&L, right now it's skewed towards a little bit on the bearish side. That means if the market drops a little bit, I will benefit more, but if it goes up, I will get some hurt from the delta standpoint. Now, at the same time, I also have the one column called theta. The total theta for Snipex portfolio is showing 1,341. That means every day passes, assuming everything else is unchanged, I will make extra $1.3 thousand every single day, which is good. That's how I trade Snipex. I manage the portfolio in the way that the delta is kind of neutral because I cannot predict where the market will go. I just keep it as neutral as possible. You can choose to be bearish or bullish, depends on your market bias. For me, I cannot predict where it goes, so I just choose to be neutral. And I let the theta work its magic. So you see that it's very good theta right now, and it continues to be accelerating as the time moves near to the expiration date. So that is the Snipex portfolio dashboard. Now, after you look at the dashboard, you know where your portfolio right now and then how much money is making every day if everything else unchanged. Now you zoom into each of the individual trade. And I have the little dashboard for each of the trade that you can check. For example, right now, today is 25th of May, which is on Monday. I built a formula in the way that as time passes, the 1SD indicator here will change also according to the remaining time to expiration of the short options and the VIX, or the implied volatility. I don't know how Thinkorswim or Interactive Broker build their own algorithm for their 1SD indicator. I use my own formula to simulate that. So for example, let's pick this trade where the short option expire on the 5th of June 2020. So I go to the platform and I open SPX June 5th 2020, and you see the TOS platform tells me that SPX can move up or down 116 or 117 points between now and the end of the June 5th. So what I use my formula in my trackers is to simulate that. I got a very close number, which is 118. Now plus minus a few points, doesn't matter. And every day I will update this one using my formula. Based on this one standard deviation indicator, I will need to see whether my strike, the 2775 here, is too far away from the current market price as compared to the one standard deviation number, right? If it's too far away outside the 1SD range, I got to close it because I have very little chance to make money from this trade. So right now the tracker tells me that from my strike 2775 to the current market price 2955, that is 180 points, which is way beyond the 118. And it automatically highlighted in red. And red means go down. Red means I need to exit it, must exit the trade. So probably when the market open, I will need to close the trade that is highlighted in red here, because I have really little chance to get it inside the 1SD, and this $75 loss here can become bigger. But if it gets inside, the $75 loss can become a profit. Depends on where the market will go, when the market opens. Similarly, this trade, I also have 155 points from the current market price, which is also above the 118. That also indicates that I need to close it. The next trade is highlighted in yellow, and the number is 130. That means from my strike 2825 to the current market price 2955 is 130 points, and it's also slightly beyond the current 1SD range, because in yellow I can choose to wait 1 or 2 days to see how it goes. I can choose to close it as well. Despite the fact that it's already outside the 1SD range, the trade is making some money. Even this trade, when the indicator show a red color, it doesn't mean I lose money, right? I could make money also. Depends on how far I am from the current market price. So in this case, I can close it to take profit, small one, but that's fine. Or if it's a small loss, I close it also, that's fine if I choose to do so. So yellow, again go down here, yellow means watch out, because this is slightly outside of the 1SD range, right? I say plus and minus 30 points outside of the 1SD range, I may consider to exit. But if it's red, that is more than 30 points outside, I must exit. Now it's in green, that means it is within one standard deviation, but it's within 1 to 0.5 on the downside or on the upside. It's inside 1SD, but it's in between 0.5 and 1. So it's still good. It's green, it's good. So I keep the trade and monitor it, because it has a chance to go out of 1SD if the market moves sharply. The green one is a good one, and it should make money, like this one, right? It's making good money. I can continue to hold it, but I need to keep an eye on the market price move. Now the blue one is the best. Blue one is within 0.5 SD, either on the downside or on the upside, plus or minus 0.5 SD. because it's so close to the current market price, I want to keep the trade as long as possible, because at that point in time, the theta worked really hard for me. I have little risk on the price move. I want to keep the trade as long as I can. So the blue one is the best, and I want to keep it. And you can notice that on the blue ones, I'm making good money, right? Very good profit compared to the green or yellow ones. So blue one, I want to keep it. And I highlight the snipback trades in different blocks or different colors as well. So this one is the one that expires in the series June 5th. And this one is the one that expired the week after, which is June 12th. And in lighter color, this is expired in the following week, which is June 19th. I can choose different color, depends on, maybe my mood. It doesn't matter. So again, the point here is color here. Red, I must exit. And yellow means I may hold or I may exit, depends, right? Now, in some cases, I decide to keep the red trades. Why? Because if I have a strong bias of the market direction. For example, this is a bearish trade, right? Because the strike is lower than the current market price and it's in red, I may choose to keep it because I believe that now SPX is hitting a very strong resistance level and it's due for a pullback. And in that case, I take the market direction then. Okay, I can be wrong, I can be right, but if I am biased on the bearish side, I may keep this one as well. Similarly for the yellow, and again the blue one and the green one are good ones, and those are making good money for me. Now there's a strange color here, this should be red. I need to fix it. And you notice that in some cases, even the trades are in green or in blue, sometimes you see small losses here also. And the reason for it is, it just happened that right after I enter the trades, VIX dropped significantly. Though the price has not moved a lot, it's still within plus minus 1 SD range. But the VIX, the implied volatility of SPX, has dropped significantly, and that could hurt the trade. In some case, when you enter the trade and you see that situation, don't be freaked out, because the trade is still long time to expiration. And just hold it and let the theta do its magic. So the small losses at the beginning can turn positive over time. That's what I experienced with this particular series, the one that expired on June 5th here. At the beginning, I entered the trade at the very high prices, but then VIX crushed after that, and then I lost some money and have to close some of the trades at losses. But then the remaining trades are now turning profitable, and that's more than enough to offset with the losses of the closed trades. A little bit on this one also. So you have one SD indicator, just tells you the magnitude of the move, right? Secondly, based on that, you will figure out what is the negative 1 SD point and then what is the positive 1 SD point. Based on the current market price, 2955 plus 118, that is 3073. 2955 minus 118, that is 2838. So that is 2 points for you, 2 goal posts for you to watch. If your strike is outside, it's in red or yellow. If it's inside, it's green or blue. That's it. That's how you look at the open trades. Now, when you go to the OTP website again, you see another tab called Watch List. Now, if you click into the watch list, you will see a list of the trades that I have not entered yet, but I added it to the list for my monitoring. You can see now the trades that I just sent out the notifications earlier today on the EES trade on $3, also EES on Broadcom, and another trade on calendar on ZSX, right? So those are the trades that I am watching, and I may or may not enter when the market opens. Once I enter the trades, I will send out notifications and I add those trades into my open trades. Lastly, when you click into the closed trades here, you will see another list. And when you click into it, you will see the list of the trades that I have closed, either for profit or loss, right? So That looks exactly the same as the open trades or the watch list. And lastly, on the open trades, I will no longer have different tabs for different days. I just simply have one and it's up to date. So today is 25th and the market has not opened. So the data is still as of the last trading day. So when it opens and when the market has closed the day after, I will update the tracker and post it again on the website. So hopefully that helps you to navigate through all the tools of the OTP website. I will see you in the next newsletter and also the Telegram chat groups.